time. All right, so what we have here is a valid head and shoulders pattern according to my rules. This may not look like a perfect head and shoulders pattern, and that's on purpose. I'm not here to show you absolutely perfect examples. I want to show you real-time examples that you can actually take and apply to real markets. And this is a real-time example of a head and shoulders pattern that meets all of my rules. Let's talk about why doing the same exact thing that we did last time by placing the market in market replay mode, which makes it really easy for me to teach. So at this point, what do we have? We have a market pushing up, pushing down, pushing back up. What we call this is our right shoulder and the head of our pattern. The rules for this is we need a break and close below and a higher high, excuse me, I said below, a break and close above and a higher high than our previous high in order to count this as the head of the pattern. Once we have the head of the pattern, the next thing I wait for, this is my first rule after getting the head of the pattern, is I wait for the market to come down and retest the first shoulder. So if we're drawing this out as a trend, we would see the market pushing up to a high, pulling back to our shoulder, and pushing up to a new high. This pullback to our shoulder, I put a horizontal line on the lowest bodies of that pullback. What I want to see, and also on the lowest low of that pullback. What I want to see is similar to the double top and double bottom thing. I want to see the market come down and test this area. I do not want to see a candle close below it. What I want to see is that the market has come down and tested this area with either a wick or a body can close in it and a wick can go past it. The only thing I can't see is a body closing below this area. So anything else is fine as long as we test and reject this area to the upside. So let's see what price does as I click play. Right there, we have a test of this area with this candle wick right here. So right now, my rule number one is met, which is a test of the bottom of the previous shoulder. So that would be this zone right here, which did get tested right here. My next rules are that, since we already have that one done, and I'll just leave that here in case I need to do another example. My next rules are that I want to see price come up at least to the right shoulder, but price cannot touch the head of the pattern. Let me make these a little bit bigger. It might be difficult to see. There and there is my termination point for my second rule. What this means is I want to see price push up and at least test this shoulder. And as long as price does not push up all the way to our head of the pattern and touch it, I don't want to see the market touch that head of the pattern whatsoever. If it does, it's an invalid trade, turns into more of a double top than a head and shoulder pattern. So what I'm waiting for is this area to be my termination zone. And again, this area is between the bodies of the candles, the highest bodies of my right shoulder, and the highest bodies of the head of the pattern. That is the termination zone for what is considered our left shoulder. So at this point, we know we can see price, or we must see price at least touch 129.57 because that's the highest bodies of our right shoulder. We know that price cannot touch the highest bodies of the head of our pattern. As long as that happens and we see a push lower, we have a valid head and shoulders pattern. Let's see what price does. Eventually we push down and we break through the neckline. And I do need a break through the neckline zone in order to classify this as a valid head and shoulder pattern. Now, let's go through that really quickly one more time to make sure you understand it. We need the creation of a right shoulder. We need price to break above that right shoulder. We then need the creation of the head, which just means we need to start seeing a pullback. The initial thing we're looking for with that pullback is that it comes down and tests the bottom of our right shoulder. We want it to at least test the bodies of that swing low, but we do not want to see price close below the low of that swing low. As long as we get that, as we do here, and the market starts pushing higher, we now have another zone to pay attention to between the highest bodies of our right shoulder and the highest bodies of the head of our head and shoulders pattern. This is the termination zone for our left shoulder, which is this right here. As long as we have the market pushing down, following rule number one, pushing back up, not touching the head of our pattern, and at least testing the right shoulder, then we have a valid head and shoulders pattern as long as we break through this neckline zone with a candle. In this case, we did, and the market continued lower which of course will not always happen, but in this specific situation, it did. So those are the rules for my head and shoulders pattern. I know that was a long one, but we're going to dissect the rules for an inverse head and shoulders. We're going to go over that a little bit more quickly since you now kind of comprehend the way these rules work. So let's take a look at an inverse head and shoulders pattern. Then we'll dive into a complete strategy using these chart patterns combined with other technical factors to create a money-making trading strategy. An inverse head and shoulders pattern is just a head and shoulders pattern flipped upside down and looks a little bit like this. This is the one we're going to be taking a look at as an example, and just with every other pattern, I'm going to go ahead and put on market replay mode to ensure that I can teach this in the best way possible as if you were actually looking at it on a real chart. So if we're looking at this on a real chart and analyzing it, we can see that we have a push down to a shoulder, which is actually right here. The reason I just did that, let me explain that to make it easier as well. Here we have a low, but here, let me draw it out, we have a lower low. With that being the case, this is what our pattern would look like. It would go to there since that's the lower low. Then we have our first shoulder pushing up to this high right here. We then need what in order to classify ahead? We need the market to break through this low. Since we did break and close below and create a new low down here, we now have a left shoulder and a head. What are we looking for at this point? What would you expect us to be looking for based on what you know about the regular head and shoulders pattern we just looked up? Well, we want to see the market test this area. Let me make these black. That might be hard to see with everything being blue. So we want to see the market test this area right here. Why? Because this is the area between the bodies of this pullback and the wick of this pullback. With that being the case, this is the area we want price to test. How do we want it to test this area? We want price to push up and at least touch this area with a wick. We can see a body close in this area. We can see a wick go above it. What we do not want to see is price push up higher and end up creating a higher high right here in price compared to the previous high over here. So let's press play and see what happens. Right there, do we have a test of our zone that does not close above our zone? Yes, we do. So at this point, what are we looking for? We already have the test of our zone. And if this pattern is just the opposite of the regular head and shoulders pattern, then we would make a zone out of the bodies of the left shoulder along with the bodies of the head of this pattern. This is the termination zone that we're looking for our next rule. What does that mean? That means we want to see price now pull back and at least touch this area, but what we don't want to see is price come all the way down and touch the head of the pattern. If we get a touch of the head of this pattern, then it invalidates the pattern. But as long as we get a test of the previous shoulder, then we're good to go to start looking for that break to the upside. So this is the area that we're paying attention to for our next rule. It is going to be between this shoulder and the head of the pattern. So let's see what price does. As we push up, we do push up a bit higher right here, but we do not close above our zone. So with that being the case, is this still valid? Yes, it is. And we're still looking for the test of our previous shoulder. So let's go ahead and see what happens with price. We push down, we test that shoulder. We now have a break of our neckline zone. This is all turning into a valid head and shoulders pattern. So we're going to go through that really quickly one more time. What we're looking for is the push down, which we have right here. We're looking for the first shoulder to create a pullback. We're looking for a break through that pullback to create the head of the pattern. At that point, we create a zone with the top of our first shoulder. That zone needs to be tested, but cannot be closed above. We then want to see a pullback from that zone to our second zone. Our second zone is between the left shoulder and the head of the head and shoulders pattern. Once we get a test of that zone, we know we're looking for the break of the top zone for a valid head and shoulders pattern. What we don't want to see is something like this where the market comes down and then we touch the head of the pattern. That's more of a double bottom, not really a head and shoulders pattern anymore, so that invalidates head and shoulders patterns. But as long as we just get a touch of the zone and we get a breakout above our first zone, we have a valid inverse head and shoulders pattern. So those are my rules for each of the patterns that we learned. That takes care of mistake number one, which if you remember, mistake number one was not having rules around chart patterns. At this point, you should have solid and set in stone rules for each of these 2/4 chart patterns. And now what we're going to do is move on to actually adding other confluences and other conditions to this, so you're not trading chart patterns in the middle of nowhere, and that is called creating a strategy. So let's move on to creating a strategy right now. So anytime you're building a strategy around anything, not just chart patterns, there's a system I like to use that I created that's called CEST. And what CEST stands for, and I know what you're thinking, I have great handwriting, is conditions, entries, stops, and targets. So when you're thinking about building rules around a full strategy, not just around chart patterns, right? When you think about building rules around a full strategy by adding these confluences, you want to have rules for the conditions before you look for your actual entry. You want to have rules for why do you press the buy or sell button? What is your exact entry? You want to have rules for where is your stop loss going to go? And ideally, you want to have rules for a target, but there are some traders, including myself at times, that do subjective targets, which you can do once you become more experienced. But in a nutshell, what you want to make sure is that you have rules for conditions, entries, stops, and targets. And that's what we're going to dive into now is conditions, entries, stops, and targets for the strategy. We're going to... Almost got him. Can y'all see that? There's a gnat in here for the strategy that you are about to learn. So let's get down to some charts and actually talk about some of the things we can add to chart patterns in order to turn them into strategies. Because if you remember, the mistake number 2 was trading these patterns with no other confluence. Let's start adding confluence and see what kind of strategy we can come up with. There are 2 different ways I like to trade these chart patterns. One is the typical reversal chart pattern, and that's the one we're going to go over first. So let's go ahead and talk about it really quickly. In order to trade a reversal, it would look something like this. We may see a market pushing lower, price pushing lower, and then we may see a head and shoulders pattern that signals a reversal in price to start heading higher. This would be an example of an inverse head and shoulders reversal pattern. In the same way, we may see a market pushing higher, price going higher, and then we may see a double top, the break of the neckline, and that signals a reversal to the downside. This is the typical way that you will see these chart patterns traded. And now that you have exact rules for each of these patterns, you know exactly when they actually happen. You're no longer confused about how to spot them. We're going to start to add different confluences in order to build an entire strategy. And a very simple way, and again, one of my favorite ways to trade chart patterns as reversals is by simply adding an RSI indicator and using this RSI indicator as my signal that we're ready to reverse. And what I mean by that is when the RSI is oversold, it's telling you that the price of an asset has been pushing down for a while. We know that what goes up must come down, and in the same way with financial markets, what goes down eventually will go back up as well, at least for the most part. And with that being the case, what we're looking for now is going to be these same price patterns, these same chart patterns you've learned the rules to already to happen when markets get oversold. For an inverse head and shoulder pattern, we would look for the market to go into an oversold situation. We would then have specific rules for our entry, stops, and targets. Again, this is going to be our condition. We're going to do this on some real charts. I just wanted to give you a quick overview. The opposite would be true for a double top or a regular head and shoulder pattern. We would be waiting for the market to double top, but only trading that double top if the market has went overbought, because that overbought condition is telling us that this market is primed to have a possible reversal. Again, we'll go down some charts and talk about entries, stops, and targets, and I'll give you examples of full trades. Let's go ahead and do that right now. Okay, here we are on the 4-hour chart of the Aussie yen. I want you to see if you can spot the head and shoulders pattern here. Hopefully you were able to. It is right here. Quite easy to see this one. It's nearly a perfect head and shoulders pattern. And is our other condition met that we've already talked about? Did price go into the overbought area of the RSI while creating this head and shoulders pattern? Yes, it did. So let's go ahead and talk about what would happen if we were actually seeing price create this head and shoulders pattern as we have throughout the video. So right here, we already have what we call our first shoulder, right? It's right here. What's the next steps we're looking for? We want a test of this area here, the bottom part of our first shoulder. We need price to come down and test that. Does it? Yes, it does. Once we've tested that, we need price to then push up and at least touch the bodies of our first shoulder, but price cannot touch the highest bodies of the head of the pattern. So here we get the touch of the previous shoulder without pushing up and touching the head of our pattern. Do we have a valid possible head and shoulders pattern right now? Yes, we do. Now, again, as mentioned, for conditions, these are our conditions for the actual pattern itself. Another condition is the market must be overbought at the head of the pattern. Let's put a vertical line here. As you can see here, this green line is showing the head of the pattern. And yes, the market is still above the 70 line of the RSI. By the way, my settings for the RSI are exactly as they come. I just have a 14 period RSI. So with all of this coming together, we now have a valid strategy, not just a valid head and shoulders pattern, but we have a valid head and shoulders pattern when the market is primed to reverse coming out of an overbought situation. So at this point, all we need right now, what do we have? We have all the conditions met. Now we need to know how we're going to enter this market. Well, to confirm this head and shoulders pattern, I need to see a break and close below the lowest body of the neckline. So this is what's considered the neckline. The bottom of the two shoulders is considered the neckline of this pattern. What I need to see is a break and close below the lowest body of that neckline. So let's go ahead and get rid of these lines to make this easier. At this point, all we're waiting on for an entry is a close below that body of this neckline, the lowest body of the neckline. Let's see what price does. We move forward and move forward again. Yes, we get that close right here on this candle. So at this point, when we're creating a strategy, we have our conditions met. Our conditions are we have all the conditions met for a head and shoulders pattern. The market's coming out of a valid overbought situation, telling us that this market is primed for a reversal. After conditions, we then looked for entries. Our entry specifically was the breakout of the neckline of the head and shoulder pattern, and very specifically was the break and close below the lowest body of that neckline. So at this point, we have a valid entry. Let's go ahead and put a position tool on right here for a stop loss. Here on the 4-hour chart, to make things very simple, I'm going to use 20 pips above the entry candle. Now, for stops and targets, it's completely up to you what you use. This is just an example strategy, and I'm just showing you how you would go about building a full strategy using these chart patterns. For me, let's go 20 pips above the entry candle. That'd be about 81 pips. And for targets, I personally normally go for about a 1.4 to 1 with my first targets, and I have 2 separate positions. That's way too complicated to get into in this video that's already going to be lengthy, so you can either do a straight 1.4 to 1 reward to risk, which is what we're going to do throughout the video, but some other examples of things you could do is you could go with a 2 to 1 reward to risk ratio, or you could come down to the next previous level of structure that you think the market will bounce off of to the upside. So with that being the case, let's hit play. And this trade worked out pretty well if you took a either 2 to 1 or a 1.4 to 1. But if you would have tried for those extended targets, it looks like you would have been stopped out in that case. But again, that's an example of the full strategy. At this point, we have conditions with the conditions for our pattern and our condition of being overbought on the RSI. We also have our entry, which is a close below that neckline. We also have stops, which in this case was 20 pips above our entry candle, and we had targets, which for me are going to be a 1.4 to 1 on the rest of these examples. So that was a full overview of the strategy. We're now going to take a look at this full reversal strategy on each and every one of these chart patterns, starting now with the inverse head and shoulders pattern, which is just the opposite of this, flipped upside down. Let's go take a look at that right now. Okay, so this one's a little bit less clean of a pattern, but guess what, guys? That's exactly what markets look like at times. You're not gonna have the cleanest looking pattern every single time you place a trade. So why don't you go ahead and see if you can spot this inverse head and shoulders pattern based on the rules you have learned so far in this video. Hopefully you were able to see it. It is, in fact, right here. And let's go ahead and confirm that by checking our rules. We have a push down. After this push down, we want to look for the lowest low, which is right here for our first bottom. And that is our right shoulder. We then get a pullback and then a break. Break down means that we now have a shoulder and a head to this pattern. We then want to see what? We want to see price come up and test between the highest bodies and the highest highs of our initial shoulder pullback right here. So what we want to see is price come into this area, but not close above it. Do we get that right here? Yes, we do. As I said before, a wick can go above this area. That's totally fine. I just want to see the closing prices and opening prices not go above it. So in this case, we have a valid right shoulder or second shoulder. Now, what's our next rule? Our next rule is we need price to pull back and touch between the lowest body of our first shoulder, and it cannot touch the head of our pattern, being the lowest body of the head of that pattern. So with this being the case, do we have a valid shoulder here? Yes, we do. Price comes down and tests this area without touching the head of the pattern. Now, with all of this coming together, this is all of our conditions for a valid inverse head and shoulders pattern. What's our other condition? We have our pattern. We also need to see oversold, in this case, on the RSI indicator, because oversold means we're primed for a reversal to the upside. So if we have those two things coming together, we can actually go from looking for conditions to looking for entries. If for a bearish entry, we're looking for a close below the bodies of the neckline, what do you think we're looking for on a bullish entry? We would be looking for the close above the highest body of the neckline of this pattern, which is right here. If we look at this neckline in total, we have bodies of candles right here for the neckline, and the highest bodies of the neckline is actually the next neckline part of this pattern, which is right here. So with this being the case, we have an entry on this candle, the close of this big green candle. We're using a 20 pip stop loss below the low. 62, that would be an 82 pip stop. And for those of you going, how did he get 62? 62 is to the bottom of this candle, and I'm adding 20 pips. Next up, we're looking for targets. What did I say before? We're going to do a 1.4 reward to risk ratio for these examples. This easily got hit here for the inverse head and shoulders pattern. So again, we're just using exactly what we've learned about these chart patterns. We're then adding the condition of coming out of either oversold or overbought, depending on the direction we're looking to trade. And we're adding confluence for an entry. We're adding rules for stops and targets. Again, the best way to build a strategy is by looking for conditions, entries, stops, and targets, and being sure that you have all of these in place before you ever place your trade, which is what we're accomplishing with this strategy. Now that we've looked at the head and typical way of using chart patterns is exactly like we just went over as reversals. But right now I want to tell you a really cool way that I use these types of chart patterns for trend continuation. And what that would look like is a market may have prices pushing higher, and then we may see a double bottom at the end of a pullback for a bullish trade. This is one of the ways I like to use double bottoms in trend continuation. We're going to talk about exact rules for it, but I do want to go over a brief overview with you right now. So that's what a bullish version of this would look like. For a bearish version, we may see prices pushing lower, and then we may see something like this at the top of a pullback. A head and shoulders pattern at the top of a pullback would signal that this market is going to continue in the overall bearish trend. So that's what we're going to be looking for on a chart. We're going to have a different type of confluence for this, and we're going to go over all of that. And I'm going to give you 4 real examples on real charts right now of how I use chart patterns in order to trade with the trend. So right now I want you to see if you can actually spot this inverse head and shoulders pattern before I point it out. Hopefully you were able to see it right here. It is a pretty large pattern, but this is what we're seeing. We have the market pushing down to a low, pushing back up to a initial shoulder, pushing down, breaking below that low for the head of our pattern. What's our rules now? Here is our termination box between the highs of those first candles right here and the bodies of those candles. Do we have a termination in that zone? We do. The next termination zone we have is down here between the lowest bodies of the first shoulder, and we cannot touch the head of the pattern right here. Is that rule met with this candle? Yes, it is. So we'll go ahead and draw that out. We have a push up. We then have a pull back to this shoulder. What are we waiting on now? To enter this pattern, we're going to enter in the same exact way. We're waiting for a break and close above the highest bodies of the neckline, which is right there. So I push the market forward. You will see that we do get that entry right here. So our first condition was what? We need to see price staying above the 200 period moving average. Our second condition was just the conditions for the head and shoulder pattern itself. Our entry was a close above that neckline. We now need to work on stops and targets. For a head and shoulders pattern, I do things a little bit differently here as well. My entry would be the close of that candle, of course. My stop loss would go below the most recent shoulder, which is right here. And then I would also still have my 1.4 to 1 reward to risk. Again, that's my favorite target scenario. It gives me a better winning percentage and also keeps me above a 1 to 1 reward to risk ratio. Let's see how this bullish inverse head and shoulders pattern with the trend played out. As you can see, it did push up and eventually hit targets and move on to what would have been great targets eventually if you would have been patient and held on to this trade. But that's an example of how I trade inverse head and shoulder patterns with the trend and a full strategy you can now take and go test in the markets to see if it's profitable for you and to see if it's something you want to add to your trading arsenal. The last strategy we're going to take a look at is how I trade regular head and shoulder patterns with the trend. Let's go ahead and go take a look at that right now. Okay, so let's work through CEST. First, our conditions. Are we below the 200 period moving average, meaning that overall, long term, we are in a downtrend? Yes, we are. Do we have the conditions met for a head and shoulders pattern? Yes, we do. Let's go ahead and discuss them one more time really, really quickly. Push up, shoulder, down, push up, head, down. We got to terminate inside of our box right here. Do we do that? Yes, we do. We need to push up and at least touch the bodies of this shoulder without touching the head of the pattern. All of that's true, correct? Yes, it is. So since all of that is true, what are we waiting on now? We're waiting on a close below the lowest low of the neckline. Let's see what we get. Price eventually does in fact close below that. We would have an entry right there. Our stop loss for this specific pattern would be above the most recent shoulder. Since we have that in place, we can now set a target. For me, yet again, 1.4 to 1 reward to risk ratio, clicking play. And as you can see, price pushed down to more than hit those targets. Again, this is the full rule set for a strategy you can actually take and go test in the markets. You can test this because it has completely objective rules. We have an objective rule for being below the 200 period moving average. We have an objective rule for how we classify a valid head and shoulders pattern. We have objective rules for entries, stops, and targets. And my friends, this is exactly how you go about building a profitable and easy to stay consistent to trading strategy and eventually